Good morning and welcome to IGTV. I'm Angeline Ong, and this is your early morning call on IG Live on Monday, the 22nd of May. Coming up in today's program, equity markets in focus as the DAX hits an all-time high. Ryanair posting a near record profit, although the budget airline is cautiously optimistic. And on the US earnings front, we have tech and retailers once again in focus. Now let's take a look at the volatility index as we count down to the open here in Europe. As you can see that the volatility index has been tracking within this band here between 20.24 and the 22.6 mark, and further up between 20 and 26. Now all this trading in the band comes as the US debt ceiling is yet to be resolved. We've got US President Joe Biden and House Republican Speaker Kevin McCarthy meeting to discuss that very topic later, less than 2 weeks before the June 1st deadline, after which the Treasury expects the federal government will struggle to pay its debts. Let's have a look at the FTSE and the DAX and the CAC ahead of all that. Let's start with the France 40 first. This is the France 40. Let me zoom in to give you a shorter term view. Pretty much treading water ahead of the open. Probably a similar picture across Germany as well. There you have it, pretty flat ahead of the open. And it's a similar picture for the FTSE as well, as you can see there. Now, all this comes as investors remain very, very cautious ahead of those debt ceiling talks. Overnight in Asia, we saw much of this mood as well. The Nikkei pretty much flat as investors sold stocks. Actually, it did settle slightly higher there, as you can see, but during the session, it was pretty much flat. This is to lock in those profits after the benchmark scaled a 33-year high in the previous session. There was a strong performance by insurers, though, which supported the market. Now, with those recent highs for the Nikkei, some analysts are starting to price in a correction. My colleague Jeremy Naylor looked at some of the levels to watch out for should the opportunity present itself to short the Nikkei.
Now, we've seen some good economic data out of Japan recently, and we've seen the Nikkei 225 hit 31,000 intraday during Friday's session on the 24-hour market. So let's take a look at the share price chart on the index, because there are some analysts suggesting we could well be in for a correction. I thought I'd draw a Fibonacci on here to look at some of the levels to watch out for. At the moment, I see no evidence of any turnaround in this market. I'd want to see a candle close below 30,000 to give me the incentive to go short on this market. But if we do get that candle close at some point in the next few days below 30,000, then I think the next line of support to watch out for is this 61.8% retracement down here at 28,188. You get a candle close below there, and then it's down to 27,523. But I wouldn't want to put a short position on this market until you get a print below 30,000, which would give me the confidence that a retracement is underway.
So that's the Nikkei. Let's have a look at the Wall Street, Jerry. US stocks are closed in the previous session, pretty much on a soft note, as hopes of the US debt ceiling talks sort of weakened slightly because investors, as you remember, were very optimistic that we would get a resolution soon, but those hopes seem to have dissipated. Let's take a look at the early picture ahead of the Wall Street Open, and as you can see here, pretty flat as a pancake as well. So investors look like they're sitting on the benches, waiting to see what happens next. Now, the PBOC has, as expected, kept its benchmark lending rates unchanged for the 9th straight month. China's one-year loan rate stayed at 3.65%, and its 5-year LPR remained at 4.3%. In a Reuters poll of 26 market watchers conducted last week, 23 predicted no change. Among them, Goldman Sachs says that as long as the 5% GDP growth target set by Chinese authorities is still within reach, then there is no reason to expect major stimulus. But now some economists would like to see some easing measures. Over the past month, a series of macroeconomic data showed that the country's economy could be losing momentum. Indeed, it has not been as strong as anticipated. NBS and Caixin manufacturing PMIs fell back below 50. Imports shrank as well by nearly 8% last month. And data showed that industrial production, retail sales, and fixed asset investments all missed expectations. Just taking a look at the yuan now for you. The yuan is quite an interesting one because it has bounced slightly, as you can see here on my chart. The yuan bouncing from 5-month lows. This is after that PBOC move to keep the market stable. Despite the rebound, traders say the yuan may continue to stay on the weaker side of the key 7 per dollar level in the near term. This is as seasonal dividend payments start to flow through soon. Now, plenty of economic news in Europe as well, including the Eurozone consumer confidence flash numbers for the month of May. The market looking out for the index to fall to negative 17.5 from negative 17 the previous month. Since the all-time low recorded in September last year, consumer confidence in the Eurozone is slowly recovering. Now to corporate news, and Ryanair is reporting a near record 1.4 billion euros profit compared to 355 million in the same period last year. The low-cost carrier flew a record 168.6 million passengers in the year through March 31st. That's nearly 20 million more than its previous annual record reached before the pandemic. For the next 12 months, Ryanair is optimistic. However, it's also cautious. Optimistic because it sees robust demand for the summer. Cautious because recent Boeing delivery delays may slightly affect the group's growth targets. Ryanair is also sticking to its after-tax profit forecast for the current year. Forecast it raised back in January after stronger than expected Christmas traffic and fares. Moving swiftly on, we've got a new episode in the tech feud that is between US and China. Which one, you ask? The Cyberspace Administration of China, the CAC, has announced that some of Micron Tech's products have failed its security review. According to the regulator, the review found that Micron's products have serious network security risks, which pose significant risks to China's critical information infrastructure supply chain, affecting China's national security. No further details were provided by the CAC, but it said it would speak to Chinese operators and talk to them about buying from the company. Looking at Zoom now, of course, a common name within corporates, and of course, Zoom's very interesting share price as well. Just getting that up for you right now. Zoom was a darling, as you remember, during the pandemic and COVID when everyone was forced to work at home. Now, even though in the near term it doesn't look as dramatic as a share drop that started in October 2020, Zoom stock has lost another 40% over the past 12 months. It is now back to levels of a time when the word COVID wasn't familiar to most of us. Zoom's future looks very challenging with the arrival of AI as well. A couple of months ago, Microsoft said it would integrate ChatGPT into its video software, Teams. And a year ago, Alphabet, which of course owns Google, said something similar, that it was going to make sure that its AI war chest was going to be quite robust and key in driving its sales forward. Alphabet, as you know, already implementing AI-powered innovations in Google Workspace. Now, to compete, Zoom would need to increase drastically its R&D spending. Microsoft poured $7 billion into its R&D last quarter. Google, $11.5 billion. Zoom, a meager $193 million. If Zoom has benefited from people working at home, then it has failed to capitalize on those having the hybrid work model or those returning to the office, and of course to work as well. The street expects earnings to fall around 5% to 99 cents per share. Revenue is anticipated to rise by less than 1% to just over $1 billion, which would be the slowest pace of sales growth in Zoom's history. Now, NVIDIA is another key stock we're watching out for you. It's reporting its Q1 numbers after the bell. The street looking out for earnings of 92 cents per share, a 32% drop compared to the first quarter of 2022. Sales also expected to fall by 21% to $6.5 billion. Now, NVIDIA has been another active stock, a good one for those wanting volatility. And it has also achieved this in its upward climb from around the October 2022 level. Now, NVIDIA has been one of those beneficiaries, if you like, of the pandemic and also lockdown, as more and more people wanted to either work from home or play more games because they couldn't go out. It's more than doubled the stock since the beginning of the year, and is closing in on its all-time high set in November 2021. NVIDIA has also earlier this month said that NVIDIA H100 GPUs is set to power in part its AI purpose-built A3 supercomputers. So where is this stock heading? Well, if it continues in this trajectory, it might look like the next resistance point is at the 33,000 mark there. But will it get there? Some investors worry that the group will not be able to sustain this very, very steep but ambitious trend. One figure illustrates these concerns. NVIDIA's ROCE, which stands for Return on Capital Employed, it's fallen 32% 5 years ago to 16%, and it remains above an ROC average of 16% in the sector, but nonetheless points to diminishing returns. If you want to read more on NVIDIA's earnings to come, IG senior market analyst Axel Rudolph has written a piece taking an in-depth TA, or technical analysis view, on the stock. Now, it's a big week for retail again, especially out of the US. The market waiting for numbers from Gap, Dollar Tree, Costco, and also Best Buy. Last week, Walmart, Target, and Home Depot gave us a good idea of their customer behavior in terms of high inflation and interest rates now at their highest since September 2007. Walmart and Target both said sales trends in the US are getting worse. Shoppers spent less, especially on discretionary goods. And DIY giant Home Depot saw a 4.6% decline in sales in the first 3 months of 2023. March, as you know, for Home Depot was its weakest month of the quarter. This is really worrying because spring is traditionally a very strong time for home improvement and therefore DIY retailers like Home Depot. Let's take a look at some other charts now that are key to illustrating consumer behavior, especially in the US. And on the more sort of budget end, Dollar Tree, if you've been there, Dollar Tree, as its name suggests, sells everything for a dollar, from birthday cards to party appliances and napkins. This is the discount store chain that is quite successful, especially in times of adversity for the US consumer. Best Buy is the consumer electronics retailer. They sell TVs, mobile phones, televisions, and as you can see, its share price has also started coming under pressure from about February onwards. And a quick look at commodities as well, especially oil, because we do have quite a few data points to look out for. This is a picture of crude at the moment, US crude on the IG platform. A lot of volatility surrounding this financial assets. A caution, of course, coming as well from the US debt ceiling talks, which are offsetting supply concerns. Our Sydney-based analyst, Tony Sycamore, says the debt ceiling talks later will remain a key driver for sentiment. The US, of course, is the world's biggest oil consumer. Last Friday, Baker Hughes' total rig count fell by 11 to 720, a drop entirely due to a fall in oil rigs in operation, down to 575. The lowest level since June 2022, rather. Now, before I go, breakfast is getting a bit more expensive every day. Before ending this edition on Early Morning Call, I wanted to show you a couple of charts. The first one being coffee. Let's get Robusta up for you. Robusta is on our platform as under DFB. And as you can see here, it's steadily been climbing since January 2023. According to dealers, there's limited supplies left in Vietnam, the world's top producer of Robusta. The market now awaiting a pickup in shipments from Brazil. And another one to look out for is cocoa, if you like hot chocolate, and also your mocha, if you add that to your coffee, or if you bake. This does affect the price of, or you rather, because it affects the price of cocoa. This is supply concerns from West Africa. And look at that. It has been steadily climbing since July 2022. And that's it for now. Before we go, just a reminder that we have charting as usual at 10:30 UK time. And if you think the earnings season is going pretty rosy so far, but you want to know what's in store for Q2, look out for my special piece throwing forward to the Q2 earnings season on our website and the IG platform. Until then, thanks for watching. I'm Angeline Ong.